Hello, everybody. It's Dr. Rick dropping in on you. Hope everybody's having an unbelievable start to your week. Hope this year has gotten off to a great start. You know what? You guys know what I say. Even if it hasn't gotten off to the start that you wanted to get off to, even if you're not where you think you should be, if you're still breathing, you are still in the fight. And I want to really, truly push that. We're getting back into the swing of things. The end of the year brought a lot of crazy stuff that we had to navigate through, but we made it. We're here, and we're getting back into the swing of things. So we're going to move back into some theme days. Today is Money Monday, so we're going to talk about all over the course of the year, all the things associated with money, finance, and it'll be directly linked to Wealth Building Wednesdays, where we'll talk about specifically wealth building mechanisms that anybody can connect and tap into. What I want to do is I want to talk, and I want to do it from a place of transparency, and I want to do it from a place of authenticity and truth, but I want to do it in a way that encourages you. Uh, because most people only see the surface of what economics is, what finance is, what it means to do XYZ in the area of money and finance. We tend to see things through a lens that is obscured, and we tend to view things from a place that isn't realistic. So I want to talk to you about three things today that is going to be extremely important. The one is the one that I have made great use of myself, and that's deployable assets. The other is diversification, which every person who is at the apex of this finance game says has to be in play. And the other is multiple sources or multiple streams of income. One of the things I want to get clear is, and I read this the other day and I saw all these comments underneath it, and it was just a reflection of just how little we understand and know about money. Robert Kiyosaki, the author of Rich Dad, Poor Dad, you know, so many other things that have come over the years that he's participated in. And a lot of people have read his book, and a lot of people use his principles. And it was reported, how true it is, I don't know, but it was reported that he announced that he has like 1.7 billion dollars of debt. And there are a bunch of different questions come up, and his net worth is roughly 100 million. And so I watched all of the conversations about what's going on, and how does he get into debt, and he's been doing this, he's supposed to be an expert and all this. And so what it tells me is, with what I've learned about finance and what I understand, what it tells me when I see that a person who has $100 million net worth announce, or it's revealed that they have 1.7 billion um, in um, in debt, it tells me that they have at least 1.8 billion in total assets, because your net worth is your entire portfolio minus your debt. So it means that he has that. Now, why would he be leveraging so heavily against his total net worth? I don't know. There is such thing as good debt, depending on what you're doing. If you're going into debt in a way that's going to produce more revenue, more assets over time, that's a justifiable move. It's risky, but anytime you're investing, anytime you're putting in something with the hopes of making more or making something else, it's a risk, because nothing in this entire situation is guaranteed. But what we have to do is pay attention to that. So it tells me that a lot of people really don't believe. They think that, hey, if a person's a billionaire, they got $1 billion worth of cash laying around. A person's a millionaire, they got $1 million worth of cash laying around. What I can tell you is the average millionaire drives a Toyota Camry and probably has a couple of 100,000 tops in cash laying around at any particular player, because it just simply doesn't make financial sense to have cash around. Cash is subject to the volatility of the market. Cash is subject, especially US currency, to depreciation in value, which has been suffering for more than 50 years since it was taken off the gold standard. And cash also, even in an interest bearing savings or checking account, is probably not that interest rate that you're getting 2.5, 3.5%. It's probably not outpacing inflation, meaning that inflation is still subtracting from the value of the money that you have in your account, meaning that 5 years from now you can have the same amount of money number wise in the account, but the value of that money will have depreciated because inflation has pulled out the value. And there are a bunch of other things that go along with that as well, associated with the market. So you have to understand that. So there are a couple of things that you have to understand. Number one is you have to hedge, you have to protect. One of the biggest things and one of the most difficult things to do is to hedge, because hedging isn't always pretty. Hedging isn't, what everybody thinks when I think, hey man, I'm getting it, I'm making this money, I'm doing this. You want to show it, you want to purchase this, you want to buy this, you want to move here, you want to do all this. Hedging says, I'm going to take that money, I'm going to put it into something that's not pretty, or I'm going to put it into something that nobody will know it's there. It's not going to be a big sign saying, hey, look, I got this. It's going to be something that ensures that when things get rough, I'm not completely knocked out of the box, because things will get rough. Things will go bad. Things will slow down. You're going to have lean months. You're going to have lean years. And that's just the way it goes. And there's a saying, and based on my experience, I find it to be true that the average millionaire will go broke a minimum of 3 times over the course of their life. And what that means is, it doesn't mean that they're penniless. To say what it means is they have more debt than they have assets, and they have to work that around. And it just simply means that they are constantly pushing the envelope. They're developing, they're growing, and markets shift. I have heard from Warren Buffett, David Swenson, Ray Dalio, and a couple of others. And all of them say to a man that you cannot predict the market. And if those guys can't predict the market, there's nobody else, I think, that can predict the market. I think that you can pretty much look at the market and see the long-term performance of certain businesses, simply because they've proven to be able to have longevity and the ability to manage up and down times. But markets are going to swing, and too many things can influence a market, from war to current events, to a change in a leader in a particular country, to so many different things that you cannot predict. And in that instance, a terrorist attack. It's so many different things that can literally shift the market just like that, that you cannot predict. Now, you can sit up and look at different companies based off of their financial reports and determine, hey, these companies, especially Fortune 200, Fortune 500 companies, especially that bottom 250, are going to perform no matter what. You look solid. That's why indexing in passively managed mutual funds is always going to be a good look. Plus, it pays in compound interest. It's a slow boogie, but over the long haul, it's solid. Obviously, assets like real estate is going to always play out. You're going to have fluctuations in the market. The market's going to go up, the market's going to go down. But over the long haul, holding property is always going to be a powerful leverage, especially when you need to produce capital to do something else that you need to do in business or in investing, or to make something happen. But let's talk about deployable assets. Deployable assets are things that you can create once, and then you put them out there, whether it be on social media, whether it be in a store, whatever. And it's out there, and it consistently produces money. When I think about deployable assets, I think about my books. I think about my courses that I create. I think about things that I created once, I put it out there, and as long as it's out there, it has the capacity to produce money. There are things that I created 14 years ago, when I first came online and decided that I was going to use the internet as my primary mechanism of rebuilding and establishing my brand and my presence. And so when I created those things, they were things that I was creating at the time because I needed to produce momentum. I needed to produce some form of cash flow. It wasn't the thing I really wanted to do the most, but it was the thing I could do the quickest. And it was the thing that I could count on. And every now and then, those things are still out there because I didn't pull them down if they remain relevant. Now, obviously, if something's become outdated, I've pulled it. But if it remains relevant, it's still out there. I may not promote it, but someone will come across it, somebody will read it, share a link, somebody will search for it and it'll pop up or whatever, and they'll end up purchasing it. It may be something I created. Of course, I created a long time ago that I'm not really hyping any longer, but it's still out there and it's still available in some digital form, and they'll do it. The books are constantly in rotation, and every time I release and publish and release a new book, the book sales from the previous books always have an increase in sales for a certain period of time because people go Google your name, or they go to Barnes and Noble and ask for books for Dr. Rick Wallace or whatever, and other books pop up and say, well, let me see that one. And so that always happens. And so that's always a good thing. And those are just some of the things that you can do. Courses, like I said, I got courses that I created on multiple platforms years ago that I still get royalties from. And then I've got my own platform now. I got the Legacy Wealth Academy. I got the Visionetics Institute Academy and the Master Fitness 21 Academy, where I'm creating courses, and those things also do so. So if you have something that you're an expert at, if you have something that you can take ownership in, that you can literally create in a digital format, or you can create in something that someone can access without you having to facilitate it, then that's a deployable asset. Create those deployable assets. What you want to do when you're doing that is ensure that it is providing a service, providing a solution, meeting a need, and it does it at a high quality level. And then you put it out there, and that's a deployable asset. Those things are great. Why? Because they continue to produce without you having to consistently and constantly service them. In other words, they don't require your time. Great way to build wealth. It's not going to be a get rich quick scheme, but it's one element in creating what? Multiple streams of income, which is something we're going to talk about in a minute. The next thing is diversification. I haven't talked to one person who I consider to be on their A game or even their B game that has not mentioned diversification as a key component to wealth building, a key component to stabilizing any financial situation. What is diversification? Diversification across assets means that all my eggs aren't in one basket, that I've literally taken the time to find multiple avenues of financial growth, and I've invested in them. And it doesn't have to be equally across the board. It's based on what performance I can reasonably project for each particular asset. It may be stocks, it may be bonds, it may be annuities, it may be real estate, it may be another business. Investing in businesses, including your own, is a great way to build your portfolio. A lot of people's who you'll see their net worth. Their net worth isn't in hard assets in the sense of something I can say like art, cars, cash. It's in their business. Their business has a projected value, and then that value is a part of their net worth. And if that business is viable, if that business is growing, if that business has longevity and long-standing potential to grow, it's a great place to put your money because it can manage and it can take the hit of inflation. It can take the hit of economic volatility through making adjustments in costs of delivery. And that is so big because I'm telling you, as a person who's experienced it, there's just simply going to be times where there's the unpredictable. There are going to be other times where you can see it coming. You just got to brace yourself, and you got to sit up and say, this is going to be a rough time. I've been having conversations probably over the last 4 or 5 months about this coming year and some of the ways that we need to be moving. And one of the things that I'll tell everyone is this is not the time to panic and lock down, because a closed hand can't receive. And what I mean by that, you can be so tight with your money because you're so afraid that you lose the opportunities to make money. And then that money that you're holding on to loses its value again because it's not in a money-making mechanism, or it's not in a money protecting mechanism. Cash on hand Sounds good. It's good to flash it, but the problem is it's completely unprotected. If it's sitting there and it's not in a money making mechanism to where it's working, uh, the phrase that I love is give your money a job. If your money doesn't have a job, you're failing in that area. It should be in something that's making money. And again, what I want to stress here is nothing that I'm sharing you is some get rich quick scheme. Nothing I'm sharing with you is some 100% guarantee that works 100% of the time. I haven't found any of those things. What I have found is over time, consistently, when you do something, even when you take a hit, and I've taken hits more than once, when you diversify, you're not completely, for lack of a better term, ass out, meaning that, boom, having the greatest job in the world means nothing if you get fired. That's what I'm talking about. Having a great business and all you have is that one business is great until the economy turns or that industry takes a major blow and you lose the income that's coming through that business. When you diversify, when you have multiple streams of income, when you set up things to where even the thing is, we get so caught up in the passion. My passion is helping people. My passion is helping people heal, helping people grow, helping people rediscover themselves so that they can perform at the highest level of their capacity and their potential. But that's not the only place I hang my hat. It is the primary place. It's what I love doing. If I could sit back and do that, and when I say when I reach that point to where I am 100% financially free, meaning that if I never work another day, me and my family are going to be great. When I reach that point, I will still be working. I will never hang up my hat, cleats, or whatever analogy you want to use. I'll never sit up and say I'm done. I will work until my last breath helping people because it's what I love doing. And the beauty of my thing is I get paid to do what I love, which makes it that much more beautiful. But I will always do it. But simultaneously, there are other things that I'm good at. There are other connections that I made. There are other things I simply understand that I'm always going to participate in. And what I can tell you is there's simply times where things aren't flowing, things aren't working, and you never get that part of it presented to you. Everybody's talking about that and they walk around with these stacks of money, they put it on the screen, or you see them driving these 300, $400,000 and up vehicles, and you look at all that and you think, okay, that's this place you get, and that's all it is, and it ever is. And there are the ultra wealthy and the ultra elite. No matter what goes on, they're going to be able to drive those things and live in those places. But the truth is, the vast majority of us are going to land in a place that we can live the lives that we never dreamed we would live. We can sit up and we can leverage and hedge against loss, and we're going to hit places where it's just uncomfortable and it's a little scary, but we have to learn how to manage it. One of the things that I heard Ray Dalio say is that the stock market is the one place that things go on sale and people panic. What is he talking about? He's talking about a down market. He's talking about a bear market. He's talking about market collapse, market crisis, when stock prices plummet and people panic and sell. I've said this since I've been talking about money on here, that when you're dealing in stocks and you're trading in the market, you haven't experienced a loss until you finalize the transaction to sell what you're holding. In other words, you can have a stock that you purchased at 100 and it could gain value to 125, and then all of a sudden it starts losing value and it gets down to 75. You put 100 in, so you've realistically, in the aim of investment, lost $25 per share, but you haven't lost it yet. Why? Because you haven't sold. That stock still has potential. It's still active. The company is still functioning. And if you've done your research and you've been aware of their financials, you're reading their financial reports quarterly or whenever they are putting them out, then you understand what that company is likely to do. And most companies that are high performers and are definitely a part of that um, Fortune 200, Fortune 250 range, you're going to see them recover. And what will happen is you'll regain that over time. What you will see moving in the waters are the sharks that we call crisis investors. When those stock prices plummet, because I used to always go, okay, if stock prices are plummeting, and that's saying that the business is struggling and that revenue is being lost and profits are dropping and the stock is dropping and people are selling, who's the dummy buying it? Actually, the person buying it is the genius. That's the crisis investor. He waits for the stock prices to drop and people to panic, and he buys those stocks for pennies on the dollars with the understanding that those stocks will once again gain value. And that's the beauty of understanding how this thing works. This is a long-term process of growth, understanding, developing a literacy, practicing it over time, and working and pushing through it. It's like anything else. There is no smooth sailing. It is consistently practicing and developing. Deployable assets are going to give you streams of income that are out there working for you while you're doing whatever it else it is you're doing to work and earn. Um, Diversification is going to ensure that all of your eggs are not in the same basket so that you aren't hit with some catastrophic loss and have absolutely nothing to fall back on or lean on. About 4 years ago, and I could be off on how many years, but about 4 years ago, I took a major hit. Lost a mechanism that was roughly about 80% of my income. Um, Literally, I mean, and it happened like that. So I had to, luckily, I had other streams of income that I could fall back on, and it's given me time to rebuild and go on. And I didn't build that overnight, so it hasn't been rebuilt overnight. But what I have been able to do is not completely just disappear and become a vapor. I've been able to sit up and say, okay, I've got these other mechanisms. I also have been able to learn and develop and grow my understanding and how I move and build. And that's the other thing. What I love about pressure is pressure pushes you in places where you have to develop new skills. Pressure pushes you in places where you have to make new connections, where you have to learn new ways of doing things, because you can get so camped out in this one space that you'll sit up and you'll literally suffocate yourself trying to push through something when the better avenue is simply to go around it. And I thank God for the people who are pouring into me. And the other thing that you're going to have is a willingness to admit you don't know. Um, that's probably the thing that sticks out the most with the people that I was when I created the Legacy Wealth Academy's Path to Generational Wealth course. The people I talk to are the juggernauts of investing. And probably the thing that blew me away the most about each one of them was their willingness to admit the things they didn't know. None of them came across as know-it-alls. They talked with authority. They spoke with authority. They obviously commanded an unbelievable understanding of what that specific thing was they did, but none of them had this arrogance of I know it all. They would tell you in a heartbeat. You can't predict that. You don't know that. I couldn't tell you. And I heard that, and what it made me feel is the comfort of being okay with not knowing. It's in the not knowing that drives the passion of understanding and growing and building. And I use that in every area of my life, not just in money, but in how I approach working with clients, how I approach dealing with my family, how I approach with my own inadequacies. And nobody wants to talk about that. Nobody wants to talk about where I need to grow or what I don't know or what I am lacking in, because it makes us feel inadequate. Uh, be sure of who you are. Know what you're exceptional at and continue to develop that. But be okay with saying, I need to grow. I need to know I could be better. Every day I wake up and my goal is simply to be a better man tonight than I was when I woke up this morning. And that's every day. And so if you do that in finance, you'll get the same thing. You're going to be better, but you got to be willing to go out there and learn. You got to stop pretending you know it all. You got somebody ask a question. It's okay to say, I don't know, versus coming up with some answer you think is going to sound right. And that's my challenge. We have to develop a better understanding. I've seen some people who come from very, I want to be very respectful in how I say this. I have seen people who come from modest backgrounds, respectfully, do some exceptional and extraordinary things in the world of finance simply because they were willing to be disciplined and practice certain principles, and they had the resilience to push through these things that come, because that's the other element and component that we must always be willing to understand and face in life, is that there are going to be challenges, that not everything is going to go the way you think it should. Not everything is going to go as planned. You're going to get hit with things in the area of business. You're going to get hit with things in the area of finance. You're going to get hit with things in the area of personal situations. Life is going to life. And what you have to be willing to do is say, no matter what, I understand where I'm going, and absolutely nothing is going to stop me from getting there. I may have to take a break. I may have to sit up and hunker down in the storm. I may have to sit up and recover some steps that are lost. But what I will not do is quit. And what I will tell you is that these people that I have observed that have come from these modest backgrounds, and I'm being respectful and modest, have done some exceptional things, not because they are different from someone else, except for in the way that they approach life, their mentality, their psychology about life, their psychology about money, and how they move in those areas. My challenge is to you that no matter where you're at, no matter what you're going through, no matter how dark it seems, commit yourself to being the best version of yourself in every area that is of significance to you. Do not let your circumstances dictate to you who you are, because there's simply going to be times that your circumstances are not going to be what it is that you want, but it is where you're at. And you have to know enough about who you are to be willing to say, this doesn't define me. And then you have to get up and you have to work your way through it to get to the place that reflects who you really are. And I challenge you to do that. Look, before I get off from here, two of the programs that I do have at the Legacy Wealth Academy is the 7-day online business launch course, which is still, I've extended the reduction in price. It's normally a $607 course. It's been on sale for $207 for a couple of weeks. I've extended it for a couple of days. I've also, for today only, added 3 complimentary sessions with yours truly. Those sessions are $550 a piece. But I'm actually added that to it. I've extended it. It started this past weekend. I've extended it to the end of today. So today midnight, if you sign up for that course, which is now $400 off, you will also get a $1,650 complimentary package of working with me, 3 sessions. There's also a link in there that you can sign up for the grand course, which is the 18-month course, which is A to Z on wealth building. It is a process, but I guarantee you every step through there is going to take you closer to what it is you're trying to do in your life, and it's worth every penny. You can also do installments on that particular course. Well, anyway, that's it for me. I want to thank you guys for dropping in. I want to thank you guys for taking it in. I hope that you share it with someone. I hope that you take time to really truly visit what it is that I'm trying to pass on to you and use it to your benefit. I hope some of you will take advantage of the opportunities to take these courses. And as I always say, I live my life on full so that when I leave this place, I die on E. All I'm simply saying when I say that is I try my best to use every moment that I'm awake in a meaningful way. And even when it's resting and spending time with family, that's important to me. That's a part of my health. That's a part of my self-care, but it has meaning. In other words, I don't idly sit by. It's always a process of thought and development, even when I'm using visualization to create what I see myself doing in the future, which is a big part of what I do and a big part of the Visionetics concept. It's about that. I will not take my potential to the grave. That's all dying on E means. I will not take my potential to the grave. My challenge is for you to do the same thing. On that note, look, I'm gonna get ready to get out of here once again. Thanks you for dropping in. You guys have an unbelievable remainder of the day. I'm out.